What's up, everyone? It's Scotty with MoneyVest. So today we are going to be talking about Apple stock, which is definitely going through a little bit of a rough patch as the new year began in 2024. It is down a little bit over, I think, 5 to 7% from its all-time highs, which is quite reasonable considering how much it's rallied so far of course, in 2023, and not to mention over the last 8 weeks as well. There's a couple of downgrades which led to this price basically getting knocked off from its all-time highs. So in this video, we're going to basically give you an overview, analyze what's been going on with this company and where the potential opportunity is. What's the end game for Apple moving forward? As always, if you enjoyed this video, find it helpful, make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. I've extended that 16% annual discount that's available for maybe a couple more days for the brand new 2024 year. And you get access to all the Discord channels, including the buy and sell alerts, options alerts, trade ideas. Everything is going to be included with the link down below. And also do connect with me on Instagram. My handle is going to be CastWRP. I do post a lot of interesting stories, portfolio updates, and of course polls that you can participate in as well. So when it comes to the ratio, so this right here is actually quite interesting because you'll notice that Apple ratio of buy ratings dips to about a 3-year low. So this is about as least bullish Wall Street has been on Apple in over 3 years, and Apple is the least loved big tech stock on Wall Street right now, with cumulative buy ratings coming down to 33 versus Amazon and Meta being the highest at over 60 total buy ratings on the stock. So it has come largely because of a couple of downgrades by Wall Street analysts, Piper Sandler and Barclays being two influential names that have downgraded and put an underweight rating on Apple. And they have maintained a price target of $161, a level that we haven't seen since March of 23. And of course, they've cut the price target by a whole dollar to $160 now. And the fact is that well-publicized downgrades seem to have prompted a roughly 5% drop in the stock over the last couple of days. And that kind of move in a mega cap stock can only come when institutional investors are selling. But it is unlikely that the big boys, we all have their own research teams, care much about Piper Sandler or Barclays. However, if they were already looking to sell for some reason, reports of downgrade by anyone would get a reaction. And this is what seems to be happening here. But I do believe there's also a little bit of that profit taking considering how strong 2023 was. And these are some of the reasoning as to why they basically downgraded the stocks. They said, and I quote, "We rate Apple underweight as questions persist about the deterioration of iPhone upgrade demand with the rising competition in the premium smartphone segment." And the follow-up punch landed Thursday when analyst Piper Sandler downgraded the rating on Apple stock and, of course, down from overweight down to neutral, and price target also slashed by $15 to $205 per share. And they said, and I quote, "We are concerned about the handset inventories entering in the first half of 24 and also feel that growth rates have peaked for unit sales. Deteriorating macro environment in China could also weigh in on the handset business as well." So as we already know, that Apple is one of the strongest companies in the world with respect to its balance sheet, with respect to the moat, with respect to a lot of different things. They are by far one of the best companies in the world. Of course, some of the most valuable company in the world as well, that's publicly traded at over $3 trillion in market cap. Of course, right now, just a little bit under $3 trillion after the sell-off, after the pullback that we have seen. Now, the real question is Apple a buying opportunity here at $180, right? So pre-market's down another 0.5%. That is going to be that support at close to $180. Now, what I will mention here, I'll go over the fundamentals and go over the valuation and whatnot. The technicals here are very, very good. So technical setup's pretty good because it's coming down to its 200 simple moving average. As you can see, 179.91 is where the 200 SMA is. And in the past, you'll notice that we have perfectly validated that 200 SMA time and time again. So once, twice, 3 times, 4 times, we've perfectly validated that level before bouncing right back up. Only just a few times in 2022, we saw the bear market in 2022 where Apple stock was kind of in that consolidation phase where it was trading below the 200 SMA, broke down even further, then recovered, then broke down even further again, kind of trading below that 200 SMA pretty aggressively down to 124. And since then, we've seen a very nice strong rally of 60%. And now we're starting to see that pullback once again of close to 4 to 5%. So the technical setup is pretty solid because not only are we coming down to that 200 SMA, RSI, MACD also down to an oversold level. Now, can the stock price go any lower? Absolutely, right? There's nobody who can predict exactly where the price is going to go. But all I'm saying is that a risk reward is pretty solid. If you are investing in this company long term, this is a good quote unquote dip buying opportunity, in my opinion. If you're trading this stock from a long perspective, then this right here would be that first potential entry. If Apple stock breaks down below the 200 SMA, breaks down below 180, then there's a stop loss that's going to get triggered, and we are going to reset and recycle this trade down to $165. So this right here is going to be that next level, that next target that I'll be watching for a long trade if this $180 support doesn't hold up. So in other words, if we see a breakdown here, then the next target, like I said, is going to be 165. That's where the next trade setup will give us the opportunity. Now, when it comes to the fundamentals, this right here is all noise. This is all noise. Apple, as we know, is one of the strongest companies when it comes to hardware, technology, smartphones. Now, one thing I will mention is the valuation for Apple has always been in question. At least for me, it's always been in question because 29, 30 times earnings multiple is simply not justified for Apple, in my opinion. Again, some people would disagree, but if you take a look at the PEG ratio, which is on a price to earnings on a growth adjusted basis, it's trading at a little bit over 3, which again, is expensive. It's a little bit high. And the reason I say that is because it's trading at a price to earnings multiple, which on a relative basis, relative to growth, is high. The growth rate for Apple is not 30%. It's not 20%. It's closer to 10 to 12%. So if we apply, let's say, a 20 to 25 times multiple, then of course the fair value drops down to 120s and 130s, right? So that's going to be a much more appropriate level for Apple from an intrinsic value standpoint. And that's simply based on the valuation. Nothing to do with growth, nothing to do with the revenue. It's simply based off of valuation and, of course, the expected growth that we have for earnings. Price to cash flow at 25.22, and price to sales are trading at a little bit over 6, actually a 7, 7.5 is where we are for the company. And again, if you take a look at the earnings expectations here for Apple, it's again 7%, 8%, 10.5%, then maybe 22%, then 12.5%. So it's not like a super high growth rate for earnings. It is quite modest, quite decent, 7 to 8%. That's going to be high single digits, low double digits growth rate for the company, which is exactly why the P multiple, in my opinion, 27, 29 is quite expensive. However, one more thing I will mention finally on Apple stock is the idea that the company is shifting its business very much away from hardware, right? Hardware is still the core of the business, which is revenues are driving from iPhones and MacBook sales and whatnot. But the main margin expansion and profitability is going to come from services. Services is why I believe Apple is trading at a higher premium valuation, because as services contribution for overall Apple's revenue increases, it's gone from 12%, 10% to now 15 to 18%, almost 20% contribution in overall revenue coming from services. That's a pretty big deal because it's a high margin business. And it's also going to increase profitability. That's going to increase the potential growth for earnings as well over the long term. If the company can go from 20% to now 30 or 40% over the next 10 years in terms of services margin, of course, you kind of tag along the artificial intelligence aspect to the overall equation and the Vision Pro and all the different applications that are going to be built on the artificial intelligence and on the Vision Pro as well. So there's a lot of potential that the market is pricing in for the premium valuation that Apple trades at. So the bottom line and the actionable sort of stuff to take away from this video is that if you are investing long-term in this company, I would disregard all the downgrades and the noise. This right here, good sort of buy the dip opportunity considering their technicals are pretty solid. My intrinsic value would still be a little bit lower considering the growth expectations and where the valuation is currently. And from a trading perspective, of course, 180 would be that first support level to watch. If it does end up breaking down, the next target would be closer to 165, and that would be a very nice opportunity from a risk reward standpoint, because at that point the price will be down a little bit over 16, almost 17%. RSI MACD will be oversold. We'd be trading at a very nice support of 300 SMA and previous support level as well. And I have no doubt in my mind that, in my opinion, there's a possibility that it bounces right back up and gives us a very nice risk reward potential moving forward. So that's where we are with Apple stock. Let me know your thoughts down in the comment section below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Do connect with me on Instagram. My handle is going to be CastWRP. Join our Discord and our Patreon. 16% annual discount available for a couple more days. Again, link's going to be down below. As always, happy investing, and I will see you all in the next video.